Good morning, traders. I apologize for the wrong date there. I logged things a day behind and I put in the wrong date, but the page has been updated. It should show 7/29/2019. Um, so it's been corrected for those who just joined. Anyway, sorry about the delay. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. This morning, we are on our 1,565th Trader Bite. It is Monday, the 29th of July, 2019, not the 26th. Um, After having pushed through to new all-time highs, the market is definitely holding on to these gains. The overall sentiment is I'm seeing some odd structure here. In case you haven't noticed, the bonds, the U.S. bonds are leading the pack today, up 0.36% on the futures in on the CBOT. They're up 17 ticks, 34 basis points. This is not yield. This is just the bond price, followed by the DAX, the Euro stocks. The 10-year is up 8 ticks, big ticks. And then crude oil comes in after that at $56.30. It's just really kind of an odd situation here. Everything seems to be going higher except the cable and the euro. The Japanese yen is up just a teensy weensy bit. Gold is up 70 cents, trading at 1,420. Gold is in a consolidation currently, and the S&P is up 1.75 points or 0.06%. The fact that the bonds and the tens and the Bund are so strong is leads me to believe that the market is positioning for this wonderfully heavily news-driven week. This week, we're looking at a market that is preparing for the FOMC and so on. No deal Brexit scenario picks up momentum as new UK government hardens its stance on Irish backstop. Focus remains on central banks, BOJ on Tuesday, Fed on Wednesday, BOE on Thursday. Key macroeconomic data in the Eurozone with inflation and growth in focus. Resumption of trade talks between China and the U.S. starting tomorrow. So just um, it's definitely a heavy week this week. A lot coming out of Prime Minister Johnson, out of the UK. He's coming in with a lot of gusto. Um, and then looking at the week ahead, I'm going to look at the highest impact releases. Tomorrow, we've got a slew of them. GDP growth out of France, GFK, consumer confidence out of Germany, business confidence out of the Eurozone, inflation rate out of Germany, personal spending and personal income in the US, GFK consumer confidence in the UK in the evening. It's about 7 Eastern in the evening, and NBS manufacturing out of China Wednesday. So today doesn't have much except for trade talks. The deck is clear. Wednesday, we have consumer confidence out of Japan. That's at 1 a.m. Eastern. GDP out of Spain, GDP growth out of the Eurozone, Fed interest rate decision and the press conference on Wednesday at 2 and 2:30 Eastern. And then the manufacturing PMI, Kaishin, I think it's pronounced, manufacturing PMI. That's an important one for China on Wednesday at 9:45 p.m. Thursday, we have again more releases. Thursday brings in market manufacturing PMI for Germany, the BOE rate decision on for Great Britain, quantitative easing decision there as well. ISM manufacturing PMI for the US. Friday, balance of trade with Canada. For Canada, balance of trade in the US and non-farm payrolls. We're entering August. We have 3 days of July remaining. Unbelievable. It just seems like the 4th of July was a week ago. So that's where we are. Okay. Let's take a look at what was expected for Friday. Friday, I didn't stick around. I did not trade. I was traveling back to Chicago. Um, Friday, the primary scenario is expected to be a market that would find support immediately in the 80-11, 80-12, 30-11, 30-12 area, and then a push into 30-22 and 30-24. That was what was expected on Friday. That's the primary scenario right there. Here's what actually happened. It was definitely a stronger trend. It did not dip, did not get into 3012. It had an open auction. Again, I didn't trade, so these are not up to date. But very clear open auction in a range out of value, and then it pushes out and above Friday's high, which was expected, and we pushed through the 3022, and the 3027 was in this area, pushed to 2950. And so overall, the structure for Friday that was left behind was that with a relatively low volume, 741,000 versus 1.1 million, but we are in the depth of summer here. This is summer trading. Plenty of structure to work with on Friday, it seemed. New all-time highs, and we have a double distribution profile. There's one distribution, and there's the high volume distribution, giving us a very clean and clear area for an over under, and that's the 30, 21, 50 area or so. So this is the area I'm going to be watching carefully. The market's trading at 30, 25, 25 currently. The delta was relatively okay. It got as high as about 14,000 and finished at about 9,000. Delta and price were moving in the same direction. As you can see, the pattern formed by the delta is about the same as the pattern formed by price. So participation on the aggressor side was decent. Volume was pretty low though. But new all-time highs in the middle of summer, we'd expect volume to be that or even worse, actually. So that's where we left off on Friday. Again, the double distribution profile did not breach the IB low. Relatively bullish behavior. Week on week, when we look at the big picture, week on week, we have a market that has made higher highs and higher lows on the weeklies, one time framing up. And here it is. Here's the SPX. This is the cash market going back to 2007. This is a profile. This is a time-based profile. Since the SPX does not have volume, this is a time-based profile, and you can see that it is really generating some decent high volume nodes as it moves higher, and it's accepting higher prices continuously. So staying above the 20 simple moving average and relatively bullish. We have pretty good participation on new highs um, to match price, and the put call ratio has dropped to the lower extreme at this point. So we'll look for this to, as the put call ratio spikes up, we would look for a market that is likely to correct. So you can see here the put call ratio pushes higher, and this is just a bigger picture view, a macro-ish view. It starts to shift down as it pushes higher and it peaks out. That marks the bottom, and so on and so forth. I've been watching put call ratios for a long time now, maybe 15 years, and it's a bit of a lagging indicator because the put call ratio, the puts get more expensive as more people look for insurance, and generally people rush to lift the premium on puts as the market is falling, causing the VIX to climb and all that. So that's where we are. In terms of the overnight is not doing very much. I mean, Friday's overnight, as I talked about in that trader bite, had a P-shaped profile with a weakish high, and it looked like it wanted to extend higher. It held the mid, was turning up by the time the market was opening. So a little bit easier to read on Friday that we're likely to extend higher. Today, it's just a big box. The point of control, the overnight point of control might shift up to about 30, 25, 50 or so, 30, 25 and a quarter. What is this price? 30, 25, 50 might shift up there. Probably will shift up there. The high is weakish. It's inside of the of Friday's high or range, and it's in the upper distribution. It's holding the upper distribution so far. It's above mid VWAP and the point of control, which are pretty much in the same spot. This is a completely balanced profile, likely to get people to look for breaks one way or the other. False breakouts and stuff is key here. Look at the delta on the overnight session. Remember, the overnight session started right here, right? So we're going to want to look at the delta at the 0 mark right there, and you could see there's just crap participation from aggressors all night long. Okay, so prices hovered around the open in the overnight session, and the delta hovered around 0. And even though it's pushed higher and away from the open, it's really not moving away. Not saying much for the overnight session. Looking like it's most likely to be a pretty sluggish open this morning. So let's look at what we're expecting for today. All right, here we go. So, let me show you what Bookmap has in store for us. Here's what the order flow looks like. Just pretty bad. I mean, I can see that some bid came in. And why is this significant? Why am I pointing it out? Because it came in, it went up right here. You could see it shift up. You could see it shift up again and shift up again and then hold steady right here. It looks like somebody's chasing the market there at 23.75. That bid does not have much longevity. It started with the European markets, but it looks like someone's chasing the market and is just sitting there, probably going to trade out that 23.75. But when I look above and below, I'm not really seeing much. Let's switch this to a color spectrum. I'm not seeing much. You'll see some offers at the 30.30. That's a strike. The offer there is pretty solid, has been there all night long. We could see something down in the 30.14. This is actually a key area for me, the 30.14. If it gets down there on the first test, I'm looking to buy that area on an initial test. But overall, I'm going to tell you that it's really not telling us very much. It seems pretty light or pretty non-committal on the order flow. Again, that's ctbookmap.pro. So for today, what are we expecting? Not too much today. I'm expecting the market to push this overnight high. I'm looking for it to sit sideways for quite some time. I'm looking for a push through the high that was put in on Friday, tackle the 30.30. I'm expecting it to see resistance in a 30.30 back through and then test into this 30.21 area and potentially push into the point of control, finish somewhere in the middle. I expect a higher high, higher low, and I expect it to sit here for today. I'm really not looking for much movement, and the calendar is relatively clear. And so that's where we stand on the primary scenario. The secondary scenario is responsive down. opens up, pushes into 21, might get a small bounce. I'm looking to trade that area, pushes down into the point of control. Remember, this is a new all-time high. And what has the market done on new all-time highs? It has very often come right off. And so I'm looking for an attempt for it to get back up to over 21 and then to test potentially lower on scenario two. I'm not looking for a continuation higher today. Okay. Third scenario, of course, is open test drive up. Not likely. So the third scenario is open test drive up, push the high through the 30-30, and then drift up to finish somewhere above. But I'm not expecting that to take place today. We'll see what happens after the open. The main idea is if the S&Ps push up above towards the 30-30, I'm going to be watching that, what I showed you in the order flow on Bookmap, on CT Bookmap. I'm going to look to see how it responds, and I'm going to look to sell that area for a reversion back into the upper distribution of yesterday. That'll be the big trade of the day, or the key trade of the day. If it does, if it does work and it pushes back through the value area, through the upper distribution, then the key target for a short above yesterday's high will be 30.2150, the 30.22 area. Again, that's the big trade of the day. But if it's not able to push above it early on, and I don't see much in terms of resistance on the way up, then or much, yeah, I'm not going to sell it. But if it drops, the first test area is 30.21, looking for a bounce there, and if that doesn't hold, then the point of control and the prior low are in place. So 30.14, as I showed you, that big red area below, 30.14 becomes the big target down under. It's 8:20 my time here in Chicago on what was an amazingly beautiful weekend, and now a rainy day. I had to run in just a downpour, but just remember, it is dog days of summer, and the trade is likely to be slow, and it demands more patience. Okay, be patient. Let the market kind of work itself out. It's good to not trade for the first half hour during these types of days, and let things set up. Let the market really tell you which side is likely to take over, and then engage. Good luck.